Hello everyone, welcome to D Street School. My name is Shivagurunathan. In this video, we will be discussing about how Nifty is going to perform on this coming week. Well, Nifty is going to break the all-time high, or will it going to be the ranging market? Before we go and discuss anything in the detail, if you are just new to this channel, I would ask you to watch my entire video and leave your comments about the video in the comment section. If you do have any doubts about the option trading, don't hesitate. Please leave your queries in the comment section. I'm very glad to clear all your doubts about the option trading. Before we will go and jump into the video, just I would like to set expectation about this video, what we will be discussing in this entire video. Initially, we will begin with the important levels of the Nifty, which means support and resistance. Once we done with that, we will go on look into the historical volatility about the Nifty. So I'm sure everyone will know the importance of the volatility, especially when come to the option trading. Once we find those levels, finally we will come to what kind of option strategy I'm going to use in this video, and I will be giving the basic thoughts about the option strategy. Finally, we will be discussing about that what strike price I have chosen to build up my strategy and what would be the profit and loss ratio. Please stay with me for next 10 minutes. I'm going to cover all these important topics in next 10 minutes. Let's first begin with the support and resistance. As we know, for quite some time, Nifty is in the ranging market. So the strong resistance level of the Nifty is 18,000. So it's trying to break the 18,000 level for a while. This is the immediate strong resistant level. After that, so we would find the next level would be 18,500. We do have a different support level between the 18,000 to 18,500, but these are the level is very strong resistant level. I'm sorry, I said support level. These are the level very strong resistant level. So what would be the support zone? So the immediate support level would be 17,800 and 17,700, 17,500. All these levels are the immediate support level, but the strongest one is 17,800 and 17,500. Two number is very strong support level. So next we will go and look into the volatility level. I mean historical volatility level of the Nifty. So I'm sure everyone will aware of what is volatility. In case if you do not have a sufficient knowledge about the volatility and how to calculate the historical volatility, everything, don't worry, I made a separate video about the historical volatility. I have shared the link in the description. Please do watch the video so that you will have a basic understanding about the volatility, and that will help you to understand these concepts so without any hassle. So these are the levels I found, the volatility levels of the Nifty. So first I will give you the outline how we can go and understand the volatility level. So here I named it R1, R2 and S1, S2. These are not the typical support and resistance level. Actually, this is a R1 and S1 is a standard deviation 1, R2 and S2 is a standard deviation 2. In order to understand for layman, so I named it as R1, R2, S1, S2. Please don't understand these are the typical support and resistance level. So I will explain this through this diagram. So these are the R1 and this is the S1, this is R2 and this is the S2. So this is the standard deviation 1, this is standard deviation 2. So how we'll go and interpret these numbers? Okay, I can tell you 68% confident Nifty will trade between this range from 17,670 to 18,368. So the remaining 32%, there will be a chances Nifty might trade outside of the ranges. So in case if you do not want to take any chances, you can go on opt for standard deviation 2. So this says 95% on confident. I will tell you Nifty will trade within the range of 17,332 to 18,727. So the remaining very less chances Nifty might trade outside of those range. Even if you go on look those number, almost it is more than 1,200 points, 17,895. So in order to go below these levels, so again, it is in the range between 17,332, right? So again, it has to move more than 500 points below the current market price. Again, so if you go and look at the top level, 18,727, again, it has to move 800 point above the current market price. Initially, I would recommend you to go and opt for standard deviation 1, so which is 17,670, which comes to under our radar. As I said, that the strongest support we can find on 17,500. So, and top level, it says 18,368. It's come near the strongest resistance of 18,500. So initially go on out for standard deviation 1. After that, you can customize your trade. If we go and take it in percentage, I can tell you on next 4 days, we can expect Nifty will will move 1.94 percentage. So in order to understand very better, just I made it as in percentage. Okay, so these are the levels, volatility levels of the Nifty. Make a note of it. That will help you to take a position according to this level. So my recommendation is bull call spread. So why I have chosen this option strategy? When we go for bull call spread, our market view would be moderate bullish. So as I said before, my expectation is about the Nifty is moderate bullish. Current close would be 17,900. I'm expecting Nifty will touch minimum of 18,100. So my target price would be 18,100. When the price reaches that level, we will exit our trade. What would be the minimum loss? So if market goes against our direction, our losses will be limited. So the primary concept of the bull call spread would be our profit will be limited as well as our loss will be limited. I will tell you how that's work, how it works. If you are going for naked call, since we have a bullish mode on Nifty, let's assume since you are going with a long call, so how much you have to pay a premium? If you go a long call around 17,000 at the money, you have to pay a premium of 112 rupees 90 paise. So 190 rupees 90 paise you have to pay the premium. So in case if market goes against your prediction, what's your maximum loss would be 112 rupees 90 paise. The premium which you paid will be the maximum loss. But while using this bull call spread strategy, your loss will be limited. I will tell you how much that would be in the next slide. So before that, so this is a two-leg strategy. One is long call at the money, another one is a short call is out of the money. So let me go on to explain you in detail about this strategy. So as I said before, this is a two-leg strategy, long call, which I opted for 17,900 strike price at the money. I pay the premium of 112 rupees 90 paise. So again, another leg is a short call. I opted for the OTM. So at the strike price of 18,100, which I received the premium of 30 rupees 95 paise. So let's continue from the previous slide. As I said before, if you go for the naked long call, the maximum loss would be 112 rupees 90 paise. While using this strategy, your maximum loss will be 76 rupees 95 paise. This is the maximum loss. Almost you will be saving 35 rupees in premium. So that's the reason I'm suggesting you, if you're option trader, don't go with a naked call. Always go with the strategy which suit for you, so that you will be limited. You will be ended with limited call if in case if market goes against your prediction. So I hope you have a basic understanding about this strategy. So again, let me conclude it. So what is the implied volatility of the both the strike price? The implied volatility of the long call would be 10%, 10.95%, and short card will be 10.88%. Implied volatility, a very interesting concept. What I will tell you about that is I will advise to you when you initiate the long call, please go and initiate when implied volatility is minimum level. Don't go initiate implied volatility is maximum level, because you will be end up in the loss. You can also see the Vega option which shows 6 rupees 75 paise for long call, which means every 1% of increase in the implied volatility, that increases 6 rupees of 47 paise on the premium. So for example, if 5% of implied volatility is increase, minimum it increased 30 rupees on premium. As soon as once you initiate this strategy, your net debit would be 76 rupees 95 paise. So break even point would be 17,976. As soon as the price reaches above level, you will be start booking the profit. The maximum loss which you will incur by using this strategy is 76 rupees 95 paise. That is the 3,847 rupees in Indian rupees. So our target price would be 8,100. This is the maximum profit which you will be earning by using this profit, using this strategy. 123 rupees, which is 6,152 rupees. So our target price would be 18,100. So these are the things I wanted to share you about this option strategy. So before I go and conclude, my perception about the market for this coming week would be moderate bullish, and my strong expectation would be market will reach minimum of 18,100. You can also see the payoff chart. So this is the fixed loss when market goes against our direction. This is the fixed profits if market goes our predicted direction. These are the things I wanted to explain to you. So in case if you do have any doubts, don't hesitate. Please leave your queries in the comment section. I will clear all your doubts. And if you have not subscribed to this channel, I would recommend you to go and subscribe this channel, so that you will not missing any option calls. So let us wait and see how Nifty is going to perform on this week. Again, we will meet on another video. Till then, bye from Shiva Gurunathan. Thank you.